Hi, and welcome to our recorded lecture all about intangible assets. So, when you talk about intangible asset, it is an identifiable non-monetary asset without physical substance. So, these assets give the user or the owner the privilege or right to produce or use something. So, example of this will be copyrights, patents, computer software, and licenses. Now, it is important for the intangible asset to be identifiable because it is needed to be distinguished against goodwill. Okay, so we will have a separate discussion on goodwill later. Now, an an, uh, an asset is identifiable if it is either separable, meaning we can always sell it to others, transfer or rent or exchange to other assets, uh, or it arises from a contractual or other legal rights. So, which means it's this either of these two will make the asset or intangible asset identifiable. So if we cannot sell it separately or there is no legal rights or contractual rights over it, then it will not be identifiable. So I have mentioned about goodwill a while ago. So goodwill is recognized in a business combination. Okay, so when two companies combine or consolidate, then that will be the time goodwill will appear. Okay. Now the uh, shall we say future economic benefits of goodwill from this synergy may not be, let us say, identifiable. Okay. So which means we cannot qualify goodwill as intangible asset. So we will never know what will be the real benefits of business combination. So that makes it uncertain and we cannot really identify it or make the goodwill identifiable. Now, another aspect of intangible asset is the control. If the entity has the power to obtain future economic benefits, so meaning if they use the asset, they will reap the benefits, and they can restrict others from using the asset, even if they don't exercise it. Still, if they have the power to restrict, okay, the access, then it means that they have the control. As we had discussed in our previous lectures, future economic benefits, those are revenues from, shall we say, usage, okay, of the intangible asset when we produce products and services or we provide services, or it gives us cost savings, okay. It's coming from the usage of the intangible asset. So that is what we meant about economic benefits or future economic benefits. So, for example, if you have the intellectual property, you can produce product which less cost or it's not really costly. So that is what we mean about future economic benefits in that aspect. Now, in terms of recognition and measurement, we will recognize intangible asset if and only if it is probable that expected future economic benefits that are attributable to the asset will flow to the entity and the cost of the asset can be measured reliably. Okay. And we have to take note that an intangible asset shall be measured initially at cost. Now, if we have a separate acquisition, okay, with regards to intangible assets, okay. So if we purchase the asset, the cost is separately acquired of a separately acquired intangible asset will be inclusive of its purchase price and any directly attributable cost of preparing the asset for its intended use. So, examples of attributable costs or directly attributable costs when you purchase an intangible asset, it will include the cost of employee benefits, professional fee, uh, which we have to pay so that the intangible asset will be working as intended, and then cost of testing to see whether the intangible asset uh, or whether the asset pertaining to the intangible asset will function properly. Okay, if it is part of the business combination, the cost of the intangible asset is its fair value at the acquisition date. So when you purchase a new business or you merge another one business from another business, the cost of intangible asset will be, of course, based on the fair value during the acquisition date. Okay, internally generated goodwill shall not be recognized as an asset. Okay, that's pretty straightforward. Internally generated intangible assets, okay, will only be recognized if it satisfy or if it is under a particular phase. Okay, so we have two phases of internally generated asset. The first one is research phase, and then the second one is a development phase. So in research phase, there will be no intangible asset from research. Okay, so whatever you spend during the research phase will not be classified as an asset. But for development costs or development phase, if you incurred cost there, it can be recognized as an asset if and only if an entity can demonstrate all of the following. There will be technical feasibility of completing the intangible asset. Okay? Its intention to complete the intangible asset and use or sell it. So there is a particular purpose when you complete, you want to sell it or use it. And now it depends on the ability to use and sell the intangible asset, how the intangible assets will generate future or probable future economic benefits, availability of adequate technical, financial, and other sources or resources to complete the development and to use or sell the intangible asset. Now, this is important. If there will be no available technical and financial or other source resources for you to complete, okay, or develop the asset or intangible asset, then it should not be classified as an asset. Okay, the reason is, of course, you need to complete the intangible or you have to complete a particular asset. So if you're developing it and you don't have enough resources to complete it, the development costs in this case will be an expense. And its ability to measure reliably and expenditure uh, attributable to the intangible assets during the development. So, internally generated intangible assets such as brands, mastheads, publishing titles, customer lists, and other similar in substance shall not be recognized as intangible assets. Now, the cost of internally generated intangible asset will be the sum of expenditure incurred from the date when the intangible asset first meets the recognition criteria. So take note of this. That is one of the reasons why research in that during that phase you're not recognizing expenses. Okay, so because it doesn't actually meet the recognition criteria. Okay, so recognition of an expense. Okay, expenditure on intangible assets shall be recognized as an expense when it is incurred unless it forms part of the cost of the intangible asset that meets the recognition. For example, the development phase that we have discussed a while ago. The item is acquired in a business combination that cannot be recognized as an intangible asset. So, meaning an intangible asset which is part of the business combination. Now we cannot classify it as intangible asset. Maybe it's worthless or will not provide us with benefits in the future. Then you have to classify it as expense. We have two types of measurements that we can use. The first one is cost model, and the second one is revaluation model. The cost model is quite simple. You recognize it, of course, initially at cost, and then you have to uh, deduct that or determine the carrying amount at the end of the year, okay, by deducting any accumulated amortization or or accumulated impairment losses. But in revaluation, that's quite different. Okay, so meaning you are not supposed to amortize. Uh, in revaluation model, you have to determine the fair value at the date, okay, less any subsequent accumulated amortization and any subsequent accumulated impairment loss. So take note of this. The fair value, you're constantly adjusting it depending on the market price. Okay, but for cost model, you stick on the historical cost. You only adjust the cost or you only affect the cost by deducting any accumulated depreciation and accumulated impairment loss. Now talks about useful life. Now we have two different classification of useful life here. We have finite and indefinite. So for finite, you can use the number of products that it can produce or the number of product the intangible asset can be applied for. And then you can also use a simple calculation like straight line diminishing balance. For indefinite life, we have to do it in a different way comparing with the finite intangible asset with finite life. So here, for finite, we can amortize it using the systematic basis. Okay. Now, if you're asking about residual value, we will assume it will be zero unless there will be an active market for that. So meaning it's available, it can be available to the public and someone can buy it, and we can always refer it to that market, or there will be a third party who commits to purchase it, okay, maybe at the end of the life. Infinite life or definite life shall not be amortized but subject to impairment test. Now, an asset or intangible asset shall be derecognized on disposal or when no future economic benefits are expected from its use or disposal. And for the disclosures, you can see on our screen, there are several disclosures that you need to satisfy. I'll give you a few moments to see the requirements for disclosures. All right, so our reference in this discussion is International Accounting Standards Board IAS 38 Intangible Assets. Thank you for watching the video. Hope you learned something.